In this video, I am gonna teach you how to earn money from trading. Trading is the act of buying and selling financial instruments like stocks, forex, commodities, or cryptocurrencies to make a profit from market fluctuations. Unlike investing, which focuses on long-term growth, trading emphasizes short-term strategies to capitalize on price movements. 1. Types of trading. Day trading. Definition: involves buying and selling assets within the same trading day, with no positions held overnight. Objective: take advantage of intraday price movements. Example: a trader buys stock at $50 in the morning and sells it at $52 in the afternoon. Risk: high due to frequent trades and market volatility. Swing trading. Definition: trades are held for a few days to weeks to benefit from short to medium-term trends. Objective: capture larger price movements than day trading. Example: a trader buys a stock trending upwards and holds it until it peaks. Scalping. Definition: a fast-paced trading style focusing on making small profits repeatedly throughout the day. Objective: profit from tiny price changes in highly liquid markets. Example: a forex trader executes dozens of trades in an hour to profit from minor fluctuations. Position trading. Definition: long-term trading based on broader market trends, holding positions for weeks or months. Objective: combine trading with investment-like strategies. Example: a trader buys a stock in a rising industry and waits for it to reach its peak over a few months. Algorithmic trading. Definition: uses automated software to execute trades based on predefined criteria. Objective: remove emotions and increase speed and accuracy. Example: a program buys and sells forex based on certain price thresholds. 2. Markets for trading. Stock market. Trade shares of publicly listed companies. Popular exchanges: NYSE, NASDAQ, and LSE. Forex market. Largest financial market, trading currency pairs, for example, were USD. High liquidity and 24-hour trading. Cryptocurrency market. Trade digital assets like Bitcoin, Ethereum, and altcoins. Extremely volatile, offering high risk and reward. Commodities market. Trade physical goods like gold, oil, or agricultural products, often used as a hedge against inflation. Derivatives market. 3. Key trading strategies. Trend following. Trade in the direction of the market trend, uptrend or downtrend. Tools: moving averages, trend lines. Breakout trading. Enter trades when the price breaks a key level support or resistance. Example: buying when a stock moves above its previous high. Mean reversion. Assumes that prices will revert to their average over time. Tools: Bollinger Bands, RSI. Momentum trading. Focus on assets showing strong price momentum. Example: buying a stock with increasing volume and upward price movement. News-based trading. Leverages market-moving news to make quick trades. Example: trading a stock after an earnings announcement or economic data release.